So today I'm excited to talk to you about ETF that I've discovered that I will be investing in. And it provides a pretty high 9.8 to a 10% dividend, which is really good during the times of high inflation and times when we need some, income to match that inflation. But anyways, let's go ahead and dive right in, take a look at it, and tell me what you guys think, all right? So today we're going to be talking about the JPMORGAN Equity Premium Income ETF, the ticker symbol JEPI. All right, so let's go ahead and jump into this, and I'll tell you why I believe that this is a good ETF to get. But of course, I'm not a financial advisor. Don't listen to me about anything. Do your own research and all that stuff. So here is the. So what is it? Okay, so pretty much it is a, let's see what it is. Okay. It's an ETF that seeks current income, so high dividend yield, right? High income while maintaining prospects for capital appreciation. So it wants to have high dividend with a potential for stock price increase as well. Okay, provide the majority of returns associated with the S&P 500 total return index while exposing investors less risk through lower volatility and offering incremental income. Okay, so they also may invest in other securities not including in the S&P 500. So that's what it is. So pretty much it's money market. It's got the S&P 500 stuff. Let's go ahead and see exactly what it's got in there. Okay, since we're talking about that. So the top holdings, it's got a government money market fund 1.7, Progressive, United Health, Hershey. So the good, strong, quality companies that we're familiar with. It's got some S&P 500 option contracts. Looks like Coca-Cola, Pepsi, AbbVie. Let's look at all 124 real quick here. Bristol Myers, Exxon, Microsoft, MasterCard, Texas Instruments, Alphabet, the Travelers, all the good quality companies that we want to be associating ourselves with. All the good quality companies from America that we lean on during the tough times. Let's see here. So as of now, let's go ahead and start over. Let's go ahead and go to the top. So as of right now, you can see the chart. It hadn't been doing good this year, past year or so. 2 years, 5 years, 10 years, max, whatever. So it's at a pretty good buying point right now. It's not at the very top, but don't care really much about charts anyways. So let's look at the fundamentals here. The gross expense ratio, the net expense ratio, it's pretty good. It's at 0.35%, so a third of a percent, maybe, something like that. Estimated distribution rate, yield over 10%. Look at that. That's pretty good, isn't it? 10% yield during times like this. Inflation's high and everything, but still, that's still pretty good. All right, we talked about the holdings. So it's all North America. It's pretty much America. Large, giant, and medium companies like we just had talked about. The sector exposure we'll talk about a little bit. Got mostly industrials, healthcare, consumer staples, IT, financials, utilities. You can see that. And the industry exposure, a lot of IT, insurance, electric, pharmaceuticals, utilities, that kind of thing, is what you would expect from a dividend company, a dividend ETF. So distribution expenses, the distribution yield is 9.82%, unsubsidized yield 11, how they calculate the yield, trailing 12 months income, all this other stuff, you can read that. But not bad, almost a 10% yield, right? With a pretty low expense ratio. Great quality companies in there. Here's the dividends. So the dividends are either, they're up and down. They're up and down, okay. But they look stable. We've got a dividends and capital gains distributions here. Looks like they have been paying their dividends. Looks pretty good, pretty good, pretty good. Yep. Dividend income, it looks 40s, 30s, 40s, 50s, 50s, 60s. So it looks like it's doing pretty good there. There's some 20s in there. All right, so let's go back to the fundamentals. Let's go down to the fundamentals here. The price to book. Okay, price to trailing earnings is 22, which is a little bit high, but still that's okay. The expense ratio 0.35. All right, so there you have it, guys. That's a quick one on the JPMorgan Equity Income ETF, JEPI. So leave me a comment below. Tell me what you guys think. Let me know what a good income ETF is for you, so we can share in the community. Go ahead and share this if you like these kind of videos. Give me a subscribe if you want to keep talking about these videos, if you like seeing these kind of videos. And please like, comment, subscribe, do all the things you do. Thanks so much for watching, guys. Really appreciate it. I wish you much success in your finances and in life. And as always, keep hustling. Peace out.